Hello and welcome to my channel, where I help you build wealth through investing and better money habits. In today's video, I want to talk about a shocking warning from Robert Kiyosaki, the author of the best-selling book Rich Dad, Poor Dad, and a renowned financial educator and investor. He is warning us about an impending market crash and global recession, and he is telling us to do something that may sound crazy to you. Do not keep cash in the bank, but buy this $30 asset instead. What is this asset and why is it better than cash? Stay tuned and find out. But before we get into that, please make sure to hit the like button, subscribe to my channel, and turn on the notification bell so you don't miss any of my future videos. Alright, let's get started. So, who is Robert Kiyosaki and why should we listen to him? Well, Robert Kiyosaki is the author of Rich Dad, Poor Dad, one of the most influential books on personal finance ever written. It has sold over 40 million copies worldwide and has been translated into 51 languages. In this book, he shares a story of growing up with two dads, his biological father, who was a well-educated but poor employee, and his best friend's father, who was a wealthy entrepreneur. He learned different lessons from each dad about money, work, and life. He realized that the rich have a different mindset and skill set than the poor and the middle class. He also realized that the traditional education system does not teach us how to be financially literate or successful. Robert Kiyosaki is also the founder of Rich Dad Company, a financial education platform that offers books, courses, games, podcasts, and events on various topics related to money and wealth. He has taught millions of people around the world how to improve their financial situation and achieve their dreams. He is also a successful investor who has built a fortune by investing in real estate, businesses, stocks, commodities, and other assets. Robert Kiyosaki has been warning about a market crash and a global recession for years, but he escalated his warnings in early 2023 as major tech companies like Apple, Amazon, and Google began laying off thousands of workers. He believes that the current economic situation is unstable and unsustainable due to several factors. He predicts that this crash will be worse than the 2008 financial crisis or the 2020 COVID-19 crisis because it will affect all sectors of the economy and all aspects of life. He predicts that millions of people will lose their jobs, businesses, homes, savings, pensions, and more. He also predicts that many countries will face social chaos, political turmoil, civil unrest, and even war. So what can we do to protect ourselves financially from this impending doom? Well, according to Robert Kiyosaki, one of the worst things we can do is to keep cash in the bank. Why? Because cash is trash. Yes, you heard me right. Cash is trash. Now you may be wondering, how can cash be trash? Isn't cash supposed to be safe and liquid? Isn't cash supposed to be king? Well, not anymore. Cash used to be king when it was backed by gold or silver or something tangible. But ever since 1971, when President Nixon took the US dollar off the gold standard and made it a fiat currency, meaning it is not backed by anything but trust, cash has been losing its value and power. There are several factors that erode the value of cash over time. Inflation. Inflation is the general increase in the prices of goods and services over time. It reduces the purchasing power of money and makes everything more expensive. For example, according to the Bureau of Labor Statistics, $100 in 1971 had the same buying power as $674 in 2021. That means your money has lost over 85% of its value in 50 years due to inflation. Taxes. Taxes are the compulsory payments that we have to make to the government for various purposes. Taxes reduce our income and savings and make us work harder for less money. For example, according to Tax Foundation, the average income tax rate for a single filer in 2021 was 14%. Which means you have to pay $14 out of every $100 you earn to the government. Fees. Fees are the charges that we have to pay to various institutions for various services. Fees reduce our cash flow and savings and make us pay more for less value. For example, according to Bankrate, the average monthly maintenance fee for a checking account in 2021 was $15.50, which means you have to pay $186 per year just to keep your money in the bank. Low interest rates. Interest rates are the rates that we earn or pay for borrowing or lending money. Interest rates affect our returns and costs of capital and make us earn less or pay more for money. For example, according to the Federal Reserve, the average interest rate for a savings account in 2021 was 0.04%, which means you earn only 4 cents per year for every $100 you save in the bank. As you can see, keeping cash in the bank is a losing proposition. You're losing money every day due to inflation, taxes, fees, and low interest rates. You're also missing out on the opportunity to invest your money in something that can grow and generate income for you. You're basically giving your money away to the government, the banks, and the market. So what should you do instead? Well, according to Robert Kiyosaki, you should buy this $30 asset that is better than cash. What is this asset? It is silver. Yes, silver. The shiny metal that you see in jewelry, coins, and utensils. Silver is one of the best assets that you can buy right now to protect yourself from the coming market crash and global recession. Why? Because silver has many advantages over cash. Let me explain. Silver has many benefits that make it a superior asset to cash. Scarcity. Silver is a scarce and finite resource that cannot be created or printed out of thin air like cash. There is only a limited amount of silver available on Earth, and the supply is dwindling as the demand is increasing. According to Statista, the global silver production in 2020 was 25,000 metric tons, while the global silver demand was 27,000 metric tons. That means there was a deficit of 2,000 metric tons of silver in 2020. This gap between supply and demand creates upward pressure on the price of silver. Durability. Silver is a durable and stable metal that can last for thousands of years without losing its quality or value. Silver does not corrode, rust, or decay like cash or other assets. Silver can withstand extreme temperatures, pressures, and shocks without breaking or melting. Silver can also be easily stored, transported, and exchanged without losing its form or function. Demand. Silver is a highly demanded metal that has many uses and applications in various industries and sectors. Silver is used for jewelry, coins, metals, utensils, and other decorative items. Silver is also used for electronics, solar panels, batteries, medical devices, photography, and other technological products. Silver is also used as a hedge against inflation and crisis by investors and savers who want to preserve their wealth and diversify their portfolio. According to the Silver Institute, the global silver demand in 2020 was driven by industrial fabrication 50%, physical investment 20%, jewelry 17%, silverware 7%, and net official sector sales 6%. Liquidity. Silver is a liquid asset that can be easily bought and sold in the market at any time and at any place. Silver has a global market that operates 24/7 and has millions of buyers and sellers around the world. Silver has a high volume and low spread, which means it has a lot of activity and low transaction costs. Silver can also be easily converted into cash or other assets without losing much value or time. Hedge. Silver is a hedge against inflation and crisis that can protect your wealth and purchasing power from the erosion of cash. Silver tends to increase in value when cash loses value due to inflation or devaluation. Silver also tends to increase in value when there is uncertainty or instability in the market or society due to crisis or conflict. Silver acts as a safe haven asset that can preserve your wealth and provide you with security and peace of mind. As you can see, silver is a much better asset than cash in terms of scarcity, durability, demand, liquidity, and hedge. Silver has proven its value and performance over time and history as a store of wealth and a medium of exchange. Silver has also outperformed cash and other assets in terms of returns and growth over time. For example, according to Macro Trends, the price of silver in 1971 was $1.39 per ounce, while the price of silver in 2021 was $25 per ounce. That means silver has increased by 1,698% in 50 years. According to inflation data, the purchasing power of $100 in 1971 was equivalent to $674 in 2021. That means cash has decreased by 85% in 50 years. According to Gold Silver, the average annual return of silver from 1970 to 2020 was 8%, while the average annual return of cash from 1970 to 2020 was 2%. That means silver has outperformed cash by 10% per year. These numbers show that silver is not only better than cash in terms of quality but also in terms of quantity. Silver has grown and preserved its value over time, while cash has lost and eroded its value over time. So how can you buy silver and where can you store it? Well, according to Robert Kiyosaki, there are different ways to buy and store silver, depending on your preference and budget. Here are some of them. Coins. Coins are one of the most common and popular forms of silver. Coins are minted by governments or private mints and have a face value and a silver content. Coins are easy to buy, sell, and store, and they have a high recognition and demand. However, coins also have some drawbacks, such as higher premiums, lower purity, and potential counterfeiting. Some of the most popular silver coins are the American Silver Eagle, the Canadian Silver Maple Leaf, the Australian Silver Kangaroo, and the Chinese Silver Panda. Bars. Bars are another common and popular form of silver. Bars are produced by refineries or mints and have a weight and a purity. Bars are cheaper, purer, and more efficient than coins, and they have a lower premium and a higher weight. However, bars also have some drawbacks, such as lower liquidity, higher storage costs, and potential counterfeiting. Some of the most reputable silver bar producers are Sunshine Minting, Johnson Matthey, Engelhard, and Royal Canadian Mint. Rounds. Rounds are similar to coins, but they are not legal tender. Rounds are produced by private mints and have a design and a purity. Rounds are cheaper than coins but more expensive than bars, and they have a lower premium and a higher variety. However, rounds also have some drawbacks, such as lower recognition, lower demand, and potential counterfeiting. Some of the most popular silver round designs are the Buffalo, the Walking Liberty, the Morgan Dollar, and the Prospector. Jewelry. Jewelry is another form of silver that can be worn or displayed. Jewelry is made by artisans or manufacturers and has a style and a quality. Jewelry is more attractive, personal, and versatile than other forms of silver, and it can also serve as a gift or a fashion accessory. However, jewelry also has some drawbacks, such as higher markups, lower purity, and higher maintenance. Some of the most common types of silver jewelry are rings, earrings, necklaces, bracelets, and pendants. ETFs. ETFs are exchange-traded funds that track the price of silver or hold physical silver in vaults. ETFs are traded on stock exchanges like shares of companies. ETFs are convenient, liquid, and diversified than other forms of silver, and they have a low entry cost and a low management fee. However, ETFs also have some drawbacks, such as counterparty risk, taxation risk, and lack of ownership. Some of the most popular silver ETFs are Assure's Silver Trust SLV, Aberdeen Standard Physical Silver Shares ETF SIVR, Invesco DB Silver Fund DBS, and Global X Silver Miners ETF SIL. As you can see, there are different forms of silver that you can buy depending on your preference and budget. You can also mix and match different forms to create a balanced portfolio that suits your needs. But where should you store your silver? Well, according to Robert Kiyosaki, there are different options for storing your silver depending on your security and accessibility. Here are some of them. Home safes. Home safes are one of the most convenient and accessible options for storing your silver. Home safes allow you to keep your silver at home under your control and supervision. Home safes also protect your silver from theft, fire, water, or other damage. However, home safes also have some drawbacks, such as limited space, high cost, and potential burglary. Some of the most popular home safe brands are SentrySafe, First Alert, Barska, and Amazon Basics. Bank vaults. Bank vaults are another option for storing your silver. Bank vaults allow you to keep your silver in a secure and insured facility that is operated by a reputable institution. Bank vaults also provide you with a receipt or a certificate that proves your ownership and inventory of your silver. However, bank vaults also have some drawbacks, such as high fees, low accessibility, and potential confiscation. Some of the most reputable banks that offer vault services are HSBC, Citibank, Wells Fargo, and Bank of America. Private depositories. Private depositories are another option for storing your silver. Private depositories allow you to keep your silver in a secure and insured facility that is operated by a private company or organization. Private depositories also provide you with a receipt or a certificate that proves your ownership and inventory of your silver. However, private depositories also have some drawbacks, such as high fees, low accessibility, and potential confiscation. Some of the most reputable private depositories that offer silver storage services are Brinks, Loomis, Mucklammet, and IDS Group. As you can see, there are different options for storing your silver depending on your security and accessibility. You can also mix and match different options to create a balanced storage plan that suits your needs. So, to summarize, Robert Kiyosaki is warning us about an impending market crash and global recession, and he is telling us to do something that may sound crazy to you. Do not keep cash in the bank, but buy this $30 asset instead. This asset is silver, a precious metal that has many advantages over cash in terms of scarcity, durability, demand, liquidity, and hedge. Silver has proven its value and performance over time and history as a store of wealth and a medium of exchange. Silver has also outperformed cash and other assets in terms of returns and growth over time. Silver can be bought in different forms, such as coins, bars, rounds, jewelry, and ETFs, depending on your preference and budget. Silver can also be stored in different options, such as home safes, bank vaults, or private depositories, depending on your security and accessibility. I hope this video has been helpful and informative for you. If you want to learn more about Robert Kiyosaki and his views on silver and other topics related to money and wealth, you can check out his website, his books, his podcasts, and his events. I will leave the links in the description below. Thank you for watching this video. Please make sure to hit the like button, subscribe to my channel, and turn on the notification bell so you don't miss any of my future videos. And remember, do not keep cash in the bank, but buy this $30 asset instead. It may be the best decision you ever make. This is Investor's Matrix, signing off.